Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live on YouTube at TradeEZ or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hey everyone, I'm Stephen Kalajian, and welcome to the Bull, the Bear, and the Ugly. Wow, what a day. One hell of a day. Everything absolutely got kabooshed, and it looked really ugly. So I'll tell you right now, the patterns were just absolutely magnificent. When the S&P futures early in the morning were pushing up to the 59.90, when I show you this pattern, I'm scratching my head and saying, who's buying them up here? And then we had a beautiful pattern at the 1:30 time period. It seems like that's the norm between 12:30 and 1:30 when the bigger time frames have been setting up. And it was all based upon the QQQs reversing to sell. And I'll show you that in a minute. And then we had another big sell around the 210. I'm going to show you the strategy for that. And then the push up on the 5-minute time frame around the 240 time period. S&Ps were trading 59.25 and they dropped 50 handles from there, 50 points. Gold absolutely decimated today. Boy, today was one ugly day. That's why I named this show The Bull, the Bear, and the Ugly. A lot of ugly today and a lot of bears out there today, right? And a lot of things, a lot of stocks and commodities, index futures got absolutely kabooshed. At the end, I'm going to explain what kabooshed is. A lot of people have been asking me what kabooshed is, all right? And but let's get into this today. So again, we saw massive selling here today. Apparently, around 11 o'clock or so, President Trump was announcing the tariffs 10% to China, 25% to Mexico and Canada by March 4th. Okay, and like we didn't know this already, but I just think that this is going to be I think we're going to get a very, very, very sharp bounce here, and I'll get into that in segment 2. Why I think that, and I'm going to show you exactly based upon the technicals why I expect that. As far as the market, the 61.66 right now on the S&P futures, I think that being the all-time high, I think that's going to hold there for a while. I am still projecting 6,500 this year. I think what happens here is that in April, Chairman Powell is going to go bye-bye. He and Trump do not like each other for whatever reason, and I think President Trump is going to put somebody in that is very favorable into cutting interest rates because President Trump wants to reduce the interest we're paying on our debt right now. And I think that is going to propel the market upward. But we'll see. I think I'm going to be right about that one. All right. But a lot of great patterns today. Like I said, last week I was calling for gold when the gold was trading around the 29.70s, 29.65. I said, look out below. Gold's down $80. Silver, kabooshed. Gold, kabooshed. Index futures, kabooshed today. If I show you these patterns today, they were absolutely Picassos. Before I start by anything, just on the opening in stocks, GEV, NVIDIA, Amazon, Microsoft, Avago, the spiders, the Qs. It was Christmas in February on the opening. Between the opening and between the 11 o'clock bounce on the S&Ps, 1050, 11, and between the 130 and between the 210 and the 250, it was absolutely magnificent day here. What I'm going to tell you is that everything I do is based upon pattern recognition, and basically it's all technical analysis, zero fundamental analysis in the market that I look at. The last time I did fundamental analysis, I told you the story, was when my daughter asked me to take her to a Lulu, and I said, what the hell's a Lulu? And that was like 10 or 12 years ago, whenever it was, whatever. And I couldn't even move in the store. But again, all technical trading here. Please join me each and every day. You can join my live stream. So many people crushed it today. I'm so happy the way people are really understanding, doing the homework, and really moving the needle here. And it really gives me great joy. One person wrote me this morning, hey, SK, blank done. Thank you. I got 5 years of membership. Membership is $2,000 for another service, so he made over 10 grand just on the opening. So very happy. Kudos. Again, everything I do is all predicated on divergence patterns. And these patterns are very powerful. If you can master the art of divergences, I've always said, you've mastered the art of trading. So let's get into it here. Let me show you, first of all, GEV, the guy who paid $351 in GEV in the pre-market, he jumped. All right. So everything that I looked at today was off of the 15 and the 30-minute time frame. So when GEV gapped up this morning right here, you tell me on this gap up. Now, I know you can see it 248. Some people sold 246s, 248s. It opened at 247. So some people sold the opening and then sold a 248. Some were offering a little higher, but most got filled. You tell me if this MACD made a new high. The MACD did not make a new high. A clear case of a sell divergence, a clear case of a sell divergence in a negative trend. In the pre-market, GEV was trading 351. I was like, look at this. You got to be short this stock based upon looking at this pattern. All right. Next stock, VST, reported earnings. I couldn't even care, right? Look at what VST did. VST in the pre-market was trading 158. And I said I'd be looking at short between the 58 and the 60 range, right? And look what happened to VST. It opened around 53. A lot of people might have sold in the pre-market. Okay, the high here was 53. The guy who bought GEV at 351 and 158 on VST, they jumped. Look at this. Boom. Look at the stock. It dropped just from the pre-market $17 on this sell divergence here. Now, if you bring up the 30-minute time frame, I'm going to show you a lot of these as well. Okay, so VST made a new high here. The MACDs were positive. Okay, but this is where I got the short. Okay, look at Amazon. The guy who paid $219 in Amazon, he jumped. Look at Amazon here on the 30-minute. Amazon, you're making a new high here. 219.97. Are these people crazy? It's down 11 off the high. MACD cannot confirm on both the 30 and the 60-minute time frame. It was Christmas in February here. All right. Look at Microsoft. Same thing. Another one. I'm going to keep going. Look at Microsoft here on the 15. The MACDs did not confirm the high. Okay. You can see even here on the 60-minute, the MACD could not confirm the high. NVIDIA, NVDA after the earnings. I knew those earnings weren't that good. Look at NVIDIA right here on the opening. You tell me if that MACD made a new high. That MACD should have been making new highs here. Non-confirmation on NVIDIA. All right. Let's look at the spiders. Same pattern. I was stuttering this morning. Look at the spiders this morning. Pushing up here. Okay. Into the negative MACD on the 30. And the MACDs could not confirm on the 15. Look at this pattern. This is a non-confirmation. Okay, and you're negative on the indicator 4 on the 30-minute. All right. Look at Lilly today. The Qs, same one. The Qs, same pattern. Where is this going? The Qs could not confirm the high. Look at this Qs, could not confirm the high on the 15. These are sell divergences. All right. Let me show you Lilly. We called it the top in Lilly today. We were shorting about the 925 level. You can see Lilly here on the 15. Right here, Lilly, right here, was making new highs. The MACDs cannot confirm on the 30-minute time frame. That was the time frame I was looking at on Lilly, actually, the 30-minute. We sold the high. We were 925 to 928, and Lilly immediately dropped to 17, okay, right around here. 17, 19, something like that right here. I think it dropped down to 17 and about an hour later, okay? Avago, AVGO, another great one. When Avago was pushing up here this morning on the opening, Look at this high, 219.25. This MACD on the 15-minute time frame could not confirm. It was Christmas in February. I keep saying it. If you can master the art of divergences, you've mastered the art of trading. This is a Picasso, one Picasso after another. All right. Then I'm going to show you the killer time frame here today. All right. Look at, if I have, make sure I did everything here. Amazon, Lily, Avago, done, Qs, Diamond, Spiders. All right. And then look at here. Look at the 60-minute time frame, bringing up the S&P futures. Now, the reason why I look at the continuous contract and the underlying ETFs is sometimes I could pick up things off the other. And at this time, at around the 10 o'clock of 10:50, 10, 11 o'clock, I said to myself, the spiders were not really showing me that pattern, okay? They were not showing me that pattern. But immediately what I did was I went, boom. I looked at the S&P futures on the 30 and 60-minute time frame. I saw that they were in sell mode, okay? You see the negative MACDs here, the rising ADXs. Look at these S&Ps. They trade up to 91. I said to everybody in the community, I said, who's buying them up here? But who cares? Let them have them, right? Look what they did. They got absolutely kabooshed. Boom. The S&Ps were moving 20 handles at a clip today. Volatility is back, okay? And volatility is going to be here for, I think, for many, many more months ahead here. So you can see the 60-minute and the 30-minute time frame reversed to sell. The 30 correlating with the spiders, okay? The 60, the rising ADXs here on the 60, rising ADXs on the 30. Look at the negative MACDs here. Then it dropped again. Then it pushed back up to 89.90. We were shorting. Look at these MACDs. There's no way you're going to get a rally when you see these negative MACDs, rising ADXs on the 30 and the 60. And look what happened. And then this is the bounce here, obviously at 130, which I'm going to show you. But these patterns were magnificent today. These patterns were absolutely magnificent, okay? Now, let me show you the real killer pattern here today, all right? When the Qs reverse to sell, on the 60-minute time frame, right around, I think it was about noon, right here, I believe, 11:30. So now, when the Qs reverse to sell, right, the 60-minute time frame correlated with the 30 and the 15-minute time frame. So what you're supposed to be doing and looking at after that, you're supposed to then look to do what? Short the first bounce on the 5-minute and then the second bounce on the 15. And look what happened at 1:30. Look at the pattern on the Qs. I said look to short the Qs above the 512.60. Look at the 15-minute time frame. Here's the first bounce on the 15-minute time frame after the 60-minute and the 60 correlated with the 30 and the 60 correlated with the 15. All three time frames align. That means you're in a trend. And look what happened here. Absolute kabooshin. Absolutely. Look at this. 512.70. And then look at it. The Qs dropped $12. Okay. By the end of the, look at this. If you took this short, 1, 2, 3, 4, 5, 6, 7, 8. Even if you took 8 bars, it dropped $9. $9. Now let me show you a really great strategy here. Okay, let me show you a really, really great strategy here. All right. I got so much to show you here. All right. If you look, we all know that, and I'll put this over here, the 15-minute time frame. Okay, put it over here. You can see, again, this is off the 5-minute time frame right here, all right? Now, when you see something like this right here, I know we're in a negative trend on the 15, the 30, and the hourly. When the algorithm reverses to sell, listen to me carefully, please. When the, let me bring up the S&Ps, because I just showed you the Qs. So let me just show you the S&Ps. When you see this pattern here, okay, when you see this pattern here, all right, where the 5-minute time frame correlates with the 15. Now you can see the yellow dots into the cayenne. You better not be long, Okay, we took some scalp longs in and out, some things like that, but nothing. Look at this negative MACD. It's the width of the Atlantic Ocean. Look at the monster selling pressure. Look at the ADX rising. The strategy is when the 5-minute time frame reverses to sell, okay, and then it correlates with the 15, the 30, and the 60, and the ADXs are rising on the 15, 30, and hourly, I would just hit every bid, okay? Hit every bid. They got kabooshed, and then this is the bear flag right here. S&Ps were trading at the time 59.25. I saw it. It was off the 3-minute time frame. Next bar, boom, kabooshed. Look at this. Unbelievable. Look at this, 58, 59.94, and they dropped 20, and they just never looked back all the way down. They dropped a total of 40 handles off the high. These are powerful strategies, and these are inverse long and or shorts. I studied this for 10 years of my life. This is what I teach here each and every day in my community. So many people, I'm so proud, so many people blowing up my phone, doing really well. And again, this is about being consistent each and every day, being on the right side of the market, and being able to trade the market with confidence. You have technology, you have me in the live room, being able to guide you and teach you along the way. So magnificent, magnificent patterns here. And I'll tell you, I'm going to just show you the inverse. And a lot of people, I taught this to so many people. When you are trading the S&P futures or the underlying ETFs, again, looking at the 3-minute time frame is for the S&Ps, because to me is the most powerful time frame, especially when you're in trending markets like this. You may not get a bounce on the 5-minute, and all the 3-minute bounces on indicator 3 were shorts. But what is the most important thing to give you the icing on the cake? And that is looking at the pro ultra shorts, the SQQQs, and or the TZAs for the Russell, the SDOWs for the Dow, but the SDSs for the S&P 500. Now, a lot of people don't trade them because they move maybe 10, 15, 20 cents, right? But a 20-cent move on the SDS is like a 40 handle drop on the S&P. So let me show you this pattern here, okay? So we already know, we can see, obviously, the ADX is rising on the 5-minute. We see the big rising on the 15, right? Now look at this pattern here, okay? All right, look at this pattern. The 5-minute time frame, what did it do? It reversed to buy, okay? With the ADX is rising on the 30 and the 60-minute time frame. And what do you look to do, right? Just throw a dart. I'd buy them. But then this is the pattern right here, getting oversold. Well, trust me, when it pulled in, this was down to like the 25, 30 range. Oversold into a positive MACD, the inverse of what I showed you on the spiders. Oversold into the rising ADX on the 15. Oversold into the big buying pressure here. This pattern confirmed the short on the S&Ps. I'm sitting, I'm like, oh, bear flag. I was hoping maybe to get to 28.30, 25, the 3-minute time frame. I'm staring right at it. Boom, the 3-minute got overbought right into the 10-bar moving average on the S&P. If I bring up the 3-minute here, you'll see the inverse to it. All right, if I bring up the 3-minute, and here it is. This is the 3-minute time frame right here. Got oversold, positive MACD, rising ADX, big buying pressure. So that's why when you have trending markets like this and you have big rising ADXs and the strategy reverses to sell, it's really difficult to get the 5-minute time frame to get overbought. I immediately looked at the 3-minute time frame, and the 3-minute time frame kicked ass. All right. Now, all right. So when I come back, okay, this is just, I got to show you one more. I want to show you a couple more. Tesla, this is too important today. All right. Let me show you Tesla. Now, Tesla's really, I think, in my opinion, bottoming out here. Tesla is negative on the 30 and 60-minute time frame. So because Tesla's negative on the 30 and Tesla's negative on the 60, okay, and you can see now we got some buy divergences here. So if Tesla gaps down tomorrow, it's probably going to be a buy off the 60-minute. So now I know that the 30 and 60 are negative, all right? And then you can see when you got the overbought condition on Tesla on the 15 into the negative trend. This is a disconnect sell divergence. That means 2 out of 3 are negative. You can see the bounce here. And look at Tesla, 291, and it dropped about $8 to $10, $9 here. Same pattern, because of obviously the Qs dropped, the whole market dropped, everything dropped. Look at NVIDIA today on the 130 time period, everything got crushed. Look at NVIDIA. When the Qs set up, NVIDIA was trading 128. Okay, now NVIDIA is negative on the 15, 30, and hourly. So again, everything set up at 130. Look at this, Microsoft, 130 time period. When the Qs were trading, like I told you, the 512.60, 512.70. Microsoft, 398, dropped 6 or 7. All right, Avago, AVGO, unbelievable. Picasso, look at this, Avago right here, 208.70, dropped 10. All right, again, look at this. Where is Microsoft? Amazon. I mean, they all. Do I have to show you every one of them? Here's Amazon right here at 140, 130, right here, 145, 213, dropped 7. Dropped 5. AMD, same pattern. AMD right here. Look at that. 102.95. AMD dropped nearly 3. So basically, and I'll show you one more pattern here. SMCI. So today, when SMCI reversed the sell at 10:30 in the morning, right, it aligned with the 30 and the 60-minute time frame. So what you do is just take the first bounce on the 5-minute on SMCI, and then what you look to do, you take the 2 shorts off the 15. Look at the 2 shorts on the 15. Here's a short, right, 46.84, never look back. Here's a second short, 45.56, and SMCI. Look at the rising ADX on the 60. I'll bring it to a 30. Look at this. Boom. Here's a 30-minute rising ADX. Big selling pressure. Do you understand how these patterns repeat themselves? I studied, like I said, 10 years of my life, watching, writing it down, tens of thousands of pieces of paper around me. These strategies work. Learn from me. Let me teach you each and every day. Come join me in my live room. I got 41 plus years of experience. All right. These patterns could help change your life trading the markets. All right. When I come back, all right, I will tell you what I expect for tomorrow. All right. So we're seeing Bitcoin bounce off this 82,000 level. Maybe it gets to 78,000. What I'm expecting for tomorrow, now we have an 830 number, the PCE number. God forbid that number comes in hot unexpected, but I don't think so. Okay. Here's what I do. And even if we did, the MACDs on the 30 and 60-minute time frame are non-confirming here. So I think if they do drop, based upon the severe oversold condition, I think we rally sharply off of that number, even if it's a bad number. That's what I expect. But watch this. Look at what I'm going to show you here. Okay, I'm going to bring up the S&P futures here. All right, on the daily, on the bigger time frame. Okay, you got this negative MACD, the trend reversed on the algorithm. So the high of 61.66 is not going to be seen for a while here. Okay, but look at this number right here. See this number, 161.57? That's the price, this distance from the 10-bar weighted moving average. Now, normally the number is 50, okay? 50. So now we're about 110 points on the away. That means the S&Ps could, in theory, rally up to the 59.90, 59.80 in the next couple of days. And again, keep making lower highs here, all right? The one thing I will tell you here, okay, is that I like the fact that the MACDs right here, are starting to come below the pivot here, like this. And when they normally get below the pivot and they start crossing positive, okay, I'm not saying it's going to happen tomorrow, but within the next 4 to 5 days, right? Again, I think we're deeply oversold here. We're 161 points away. Even if we gap down tomorrow, I think it's going to be short-lived. I think they rally. You got a ton of overhead resistance here, and monster overhead resistance here. Even if we do that, it's going to take a bulldozer to get through this here. All right, but that's probably months away. All right, down, up, and then they get kabooshed, and then they're going to start rallying again off that. Okay, I think it's going to be sometime April. Again, like I said, when President Trump, I think he's so desired to cut interest rates. Powell doesn't want to cut them right now. I think he wants to reduce the debt and especially the interest that we're paying. And I think that's going to be a very, very big thing for the market. The markets are dying for interest rate cuts. Yields went up today. But again, right now, you trade what you see. That's important. And I wanted to show you, well, too late now, but I saw a really great pattern in MSTR here. Again, Bitcoin and Coinbase. I think if Coinbase drops below 202 to 197, I think you got a nice trade there in Coinbase. I think MSTR, if it dips down to the low 200s, maybe the 212, 215 to 2, maybe 225. So many stocks are getting deeply oversold here. Just looking, Tesla is one of them. I think if this Tesla trades between the 77.5 and the 82.5 tomorrow, I think Tesla is going to rip at least anywhere from 8 to 15 points higher. All right. So with that, again, big number tomorrow, that PCE number at 8:30. All right. And let's see what happens. I am short-term bullish here because of the deep oversold condition. And I'm hoping we're going to get that bounce in the next 4 to 5 days, 6 days, and then look to short, one more push down, and then I think we go right back up again. All right. When we come back, another great story. So a few months back, a gentleman reached out to me and said, Steve, I need your help. I've been trading and haven't been doing really well. And I said, okay, time out. Let's take it slow. I said, what's going on? He said, I don't really trade my own account. I do trade these funded accounts, right? And I've been blowing them up. So what these funded accounts is that they're like these prop accounts, and I'm not going to mention names of the firms, but there's about several out there that are very, very, I think there's tens of thousands of people that use them, right? And he says to me, I just can't get it right. I'm just blowing up these accounts, and I'm just constantly just buying new ones. And just, first of all, I said to him, okay, you don't know what you're doing, obviously, right? And I said, well, now you're with me, and your goal is to try to make $300 to $500 a day trading in this market, or back then it was pretty active as well. And I said, it's just important, take a step back, learn before you buy these accounts, these funded accounts. Whereas, like, if you pass the evaluation, and then eventually what you're going to do is, and you keep a steady, constant making money, they pay you 90%, whatever. Okay. And anyway, make a long story short, right? He says to me, he joined my live room, and he says, I have 3 kids, and I heard the whole saga. And, I said, I'll help you whatever I can. I can't help you personally, but just pay attention in the live stream and be able to just, bear with it. And just when you hit your goal, you stop. Okay. When you hit your goal, you stop. Some of these people have multiple accounts. So if they make 500 and they have 4 accounts, they make actually 2,000. Some of these people get paid out big money. I know a gentleman in Australia, he absolutely, from my best recollection, he crushes it. Okay. So I just said to him, I have one question to ask you. I said, how long have you been doing this for? He said, several months. I said, okay, how many accounts did you open? 1 or 2? He says, no, 64. 64 funded accounts at probably between $50 and $80 each. I think that was the number. Even if I go the low number, 50, he spent close to over $3,000 on these funded accounts. Doesn't know what he's doing. Just kept on trying to, it's gambling in my eyes. So, these are the stories I hear all the time. And I understand people want to learn and people want to try it on their own. But I say, take a step back. Like one time I got a gift to go to race in like a big oval track. It was a Christmas present worth a couple $1,000s. I ended up not doing it for some reason. I think I got sick or something like that, or whatever happened. But before you get in the race car, I just don't show up to the track, put a helmet on, a suit, and jump into a NASCAR and then floor it and do my 10 or 15 laps I'm allowed, or 8 to 10 laps I'm allowed to do to get the experience. It was like a Richard Petty experience type thing, right? And I didn't do that. I had to sit in a classroom for 2 hours, do another hour here with this guy, another 45 minutes with that guy, the equipment guy. So it's like a 3.5 hour, 3 hours before you even get in the freaking race car, right? So I never did it. Okay. However, why are people so prone for self-destruction, right? And that's the theme here today, right? Don't be your own worst enemy, right? Why pull the trigger if you don't know what you're doing, right? Why are you buying 64 eval prop accounts before you even know what the hell is going on? So that's the message, okay, today. Again, I could write a book, Bigger Than War and Peace. So many stories I come across. I actually was looking last night for my book with all my stories in them. I mean, they're all up here, but I mean, it's just amazing. One night, I think I used up a whole pen in writing all the different headlines of all the different stories I've heard in the last over 41 years. So with that being said, I also learned when you salute, you have to have your palm in. So I apologize from a veteran told me today. So anyway, I'll see you here tomorrow on The Bull, the Bear, and the Ugly. Please subscribe. Please leave comments. Anybody has any questions, you can text me at 914-500-7484. God bless you, and palm in. God bless the United States of America. Be well.
Thanks for tuning into The Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe on YouTube at Trade EZ or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.